Guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, owner of Mortgage Specialists. Are you going to be a recent home buyer, or are you ready to buy a home and you're concerned about the word mortgage insurance? So that commonly happens, and in lending for over 25 years, we're going to talk today about the real deal about mortgage insurance and what it really means, because I think a lot of individuals that are paying mortgage insurance are getting facts and information from somewhere else other than the actual source of what is really going on with mortgage insurance. So today, we're going to explain all the pros and cons behind mortgage insurance and why it's so impactful for you as a homeowner. So first, what is mortgage insurance? So mortgage insurance basically is insurance that covers the servicing lender in case you, as the borrower, goes into default. And what does default mean? In case you miss your payments and you can no longer afford the home and the mortgage loan that you have, and you start in foreclosure. There's two different kinds of mortgage insurance. For conventional, there's called private mortgage insurance, and there's many of private companies that are out there. And then there's also mortgage insurance premium for FHA. So both of those two different kinds of mortgage insurance are the exact same scenario, meaning they cover the servicing lender for that risk. So why is mortgage insurance required? Well, through years and years and years of studies and statistics, they have found out that if you put less than 20% down, you're more risky than someone that doesn't put 20% down. So if you're putting 20% down, the risk is much lower than if you put less than 20% down. So because of that, that is the threshold of where mortgage insurance is once you put 20% down on conventional loans, you no longer have to pay mortgage insurance anymore. Well, gone is the case on FHA loans. It doesn't matter if you put 20% down in FHA loans, they're still going to charge you mortgage insurance premiums. So we've talked about the two different kinds of mortgage insurance. So why would you as a consumer want to have mortgage insurance? Well, first of all, the reason why you want to have it is because it takes many, many years to save enough money to put down 20% down. And there's been lots and lots of studies out there that hopefully we'll be able to share a couple in the bottom of this video that explain in order to save 20% down, it might take 10 to 15 years for a borrower to save. If that was to happen, and that was the market for all conventional loans or FHA loans that are out there, the amount of borrowers would dwindle and diminish extremely. So don't be scared of mortgage insurance. It's not the end of the world. And why do we say that? Because we want to look at the cost of what mortgage insurance is. The cost of mortgage insurance depends on how much you put down, your loan size, and your credit score. So if you have a larger down payment, or if your credit score is very high, the mortgage insurance is very inexpensive on conventional loans. And this is really different than what has happened in the past and in history. Because again, mortgage insurance covers foreclosure, basically. So if we have very low foreclosures, the insurance should go down. Similar to car insurance. If you have very few accidents or no accidents that are happening, like during the pandemic, a lot of people were not driving around. So because of that, there was going to be less number of accidents. Car insurance, in theory, was talked about going down. And for some, it did. But mortgage insurance used to be very, very expensive. And people that are, let's say above 30, 40, 50 years old, remember at times when mortgage insurance used to be hundreds of dollars a month. And that is very expensive. Nowadays, that's not the case unless you have very, very low credit scores and putting a small down payment down. So the insurance costs can be very small. You can pay a factor of 0.2%, 0.3% of your loan amount, which in our eyes is cheaper than liquidating a large stock or investment account that you might have to pay capital gains on, and you don't have the ability for that money to move and grow as time goes on. So paying mortgage insurance and the cost of mortgage insurance isn't extreme, but it depends on every situation. Again, if you have great credit and a decent down payment, 5, 10, 15% down, the mortgage insurance is very cheap. So we talked about when mortgage insurance is required, why it's needed, what the costs of it are. So why do we need the pros and cons? We chatted about that too. The pros are it allows you to get into a home quicker. So even if you're paying the mortgage insurance, it can fall off once you get to a loan to value of 78%. So once your loan gets to 78% of the original value of the home, your mortgage insurance falls off. So for some, that's very quick if you're making extra payments Or if your home value is going up, you can also request for an appraisal to be had to drop the mortgage insurance as well. So many are thinking they're going to have this mortgage insurance for their full 15, 20, 30 years. But in actuality, most borrowers have it 5 to 10 years. They might buy a new property and that goes away. They might refinance to get rid of the mortgage insurance, or the mortgage insurance falls off. You do want to pay attention to your mortgage insurance and check in with your mortgage lender or your mortgage broker every year and see, hey, what is the value of my house compared to what I'm paying in mortgage insurance? So some people say, let's go get an appraisal. Well, if an appraisal costs $500 to $600 and your mortgage insurance you're paying is $20, you might choose to pay that $20 for 10, 20 payments over paying for a full cost and appraisal. So there's mathematical numbers that we can look at and calculate to make sure you're getting the best bang for your buck, which is honestly the best payment for the house that you can get, and looking at all of your options. In certain markets, we advise clients to pay the mortgage insurance up front when rates are very low. Right now, we're advising clients to pay monthly mortgage insurance because at some point in time, they're going to be refinancing and equity is going to still continue to grow. So hopefully you learned a lot about the misconceptions of mortgage insurance. It is not bad. It is not all expensive. A lot of people will say that it is, and it's not always not needed. It's just like any kind of investment. The sooner you start investing in yourself or in your financial future, the quicker you're going to see the rate of return increase. Whether that's starting in the stock market with $5, $10, $20 a month, or starting and purchasing a home, making monthly payments, watching the value of your home grow and your mortgage loan go down. These are all basic financial principles that we all live by. So in conclusion, we encourage you to look into mortgage insurance, ask the questions, make sure you're educated and going into how mortgage insurance affects you. Hopefully this video helped educate you. And if it did, please give us a thumbs up at the bottom here. We're here to help give consumers the correct information, the right education of what is actually going on with the markets and how mortgage lending affects homeownership and your financial future moving forward. I'm the owner, Brent Rasmussen of Mortgage Specialists, and we're always here. If there's a way you can contact us anytime on our phone, 402-991-5153, or hit that subscribe button. Check us out each and every week for educational videos that impact you, the future homeowner and current homeowner here locally in the Nebraska metropolitan area. Have a great day. We'll see you all next time. Mortgage Specialists. Driven, trusted, reliable.